Shifting our focus to the cattle markets, COVID-19 continues to disrupt processing capacity. On Wednesday, we visited with Mike Briggs of Briggs Feed Yard to get his thoughts on how big of impact this new variant of COVID is having on the cattle industry.
We backed up cattle in 2020 from COVID, and it took till clear in August this year to kind of get it cleaned up, July, August to kind of get caught back up. So if we start backing cattle up here, first and foremost, it's going to ruin our spring rally that we typically get, that we're all waiting for. And it's just going to back cattle up, and it's going to destroy this market. The other thing it's doing already is now packers are running the same play, just like in football, keep running it till they stop it. They're running this same deal where now their margins are just going skyrocketing because the price of beef is going up because they've got a chokehold on it again. And we're getting our price beaten down again. So they're just making money hand over fist. So they have no incentive to do anything different is my point. And so this could really be a problem.
We're starting to talk about some of these factors driving the market right now, but in general, we're looking late January at this point of time of broadcast. What do you make of the cattle market right now, and what are you looking forward to?
Well, because of the backup and the lack of slaughter, I think we're going to struggle a little bit with selling prices because of lack of slaughter. Now, as we go through, our numbers are going to continually get smaller and smaller if our kill capacity is where it's supposed to be. So I think the market's going to be pretty good. If they back these cattle up on us, it's just going to be a slow plodding. Yeah, we might stay in the 130s, which is better than in the 90s where we were a year ago or so, but you hate to see your profit opportunities getting taken away from us, because it's been a long 2.5 years if you've been a cattle feeder. It has not been fun. And they're finally getting to where we can make a little money and kind of get our head above water a little bit, and then they're going to take us and dunk us again, is my fear. But like I said, I think this is going to burn through us at a decent pace, and maybe we can get going because the packer is making a lot of money, so he does have incentive to slaughter.
This week on Market Journal, our grain analyst, Todd Holman, noted that $6 corn, he doesn't expect it to last very long. Historically speaking, though, Mike, lower corn prices mean higher feeder prices for cattle. Do you think that'll be a trend we'll see in the near future?
Well, I disagree with that, gentleman, wholeheartely, because I'm concerned about the drought in South America. They've gotten some rain the last few days. We beat the corn market down Monday. It was down lower yesterday and finished higher. Today it's up quite a bit. I think there's going to be a lot of upward pressure in the corn market, and I think that's going to hold feeders in check. Like I've said for, gosh, I don't know how long now, if you buy cattle, you better buy your corn, because this thing could get loose on us. You're going to have a smaller crop in South America, so that's going to put more pressure on the northern hemisphere crop. The corn market's going to try to buy acres, so I think this corn price stays elevated for quite a while. And if you don't see this La Nina burn out in June and have it start raining, you're a long ways from corn price staying down. So there's a lot of risks there at this corn market. I disagree with that gentleman. I don't think we're done yet.
Well, we've got a cattle on feed report coming out later this week, but that'll be out before our broadcast. So let's get a preview of some of your thoughts of what we could expect with that.
I think you're going to see really good marketings, maybe somewhere in the +2%, +5%. Once again, packers were very profitable. Demand was excellent. So I think there's going to be a lot of pull through. So I think you're going to see good marketings. Along with that, I think you're going to see really good placements. I know we just got a tsunami of cattle in December, which was really nice. Typically, you don't see a lot of cattle move in December. A lot of guys are holding them till after the first of the year, but you saw a lot of cattle move and a lot of cattle placed. So, and there was some profit opportunities there. So I think you're going to see a big placement number, probably +10%.
I want to get to a producer question we had this week. Producer asked the question, for that guy out there feeding livestock, or cow-calf guy perhaps, that has less than 100 head, what do you see as the future for them in this industry? Is there going to be room for that smaller producer in the cattle side of things?
I think, if that's an add-on to his regular business where he's a farmer, yeah, because I think calves, if corn doesn't get too far out of line, the cow-calf guy is going to get his turn here, because we've liquidated cows like crazy the last 3 years. So there's not going to be a lot of calves for sale. I've heard some prognosticators think that next fall packers are going to have trouble finding 5 days worth of slaughter. That will be an interesting situation I have never seen. Could be very profitable for the guy in the feed yard if he's got fat cattle. If that happens, that's going to push feeder prices up. So I think that guy's got profitability in his future. You know, the thing I see as we go forward and talking to a lot of my customers that do cow-calf, to find grass for summer is just becoming so hard, and it's so pricey what is left out there. So that's a challenge for it. If you don't own your grass, that could be an insurmountable challenge. I don't know.
Final word is yours this week, Mike. What else would you like to leave our viewers with?
Well, I'm optimistic in the cattle business. I think you kind of always have to be because it's pretty big struggle. But if we don't get cattle backed up here and we keep chugging along with slaughter, I think demand is really good, and I think there's going to be some profitability. Now, do you want to run out there like a drunken sailor and just buy cattle like crazy and not protect yourself? Absolutely not. You better be protecting your corn. Now, as far as risk management strategy, I'd probably want to be a buyer of puts and a seller of calls, set myself up a window there, because I want to give this market a chance to run if it's going to run.
Don't be the drunken sailor. That's the message of the week.
Yes.
Mike Briggs, appreciate your time today.
Thank you.